Hello everyone, and welcome back to another XRP market update. Today we're looking at XRP on the daily time frame. It has been a few days since our last detailed review, so let's reassess the broader structure and see where the market currently stands. At this stage, I continue to treat the entire move from the January high as a correction that is still unfolding. From a structural perspective, this decline still looks like a three-wave move to the downside. There is a possibility that a local low formed on October 10th, but at this point that is far from confirmed. We may still see lower prices. I'm currently using the Bitstamp chart. It's primarily because it provides the most complete historical data on TradingView compared to many other exchanges. However, this also introduces a problem. On Bitstamp, the October 10th low sits around the 1.55 to 1.60 region, right at the 38.2% Fibonacci retracement, which is actually an ideal target for a fourth wave correction. The issue is that on several other exchanges, particularly Binance, the price drops significantly lower on the same date. Because of that inconsistency, I do not consider the October 10th level a confirmed bottom. For confirmation, I would need to see clear evidence, such as a clean 5-wave impulsive move to the upside on lower time frames. At the moment, we simply do not have that. Current support lies roughly between 1.75 and 2.16. To refine this further, we can remove some of the upper levels and include the 88.7% retracement, giving us additional areas to monitor around 1.66 and 1.76. From one perspective, this could be interpreted as a potential 1-2 setup, but the second wave is extremely complex and best described as a falling knife. Regardless of the exact wave count, the region around 1.55 remains a very important support zone. We previously saw demand in this area back in April, and it also aligns with the 38.2% retracement, a key Fibonacci level in corrective structures. For the bulls to genuinely regain control, we need to see more than just stabilization. What's required is a clear upside impulse followed by a break above major resistance. That key resistance zone sits between 2.69 and 2.84, an area we've discussed many times. This is a critical zone, and it should not be underestimated. This resistance is important for two main reasons. First, price action spent several months trading above this level before breaking down. Since then, it has repeatedly been tested from below and rejected. Second, the upper boundary around 2.84 marks, the level where heavy selling volume entered the market on October 10th. This strongly suggests the presence of a sell wall, creating a dense cluster of resistance. Before we zoom into the lower time frames, a quick note. We're currently working with Bybit, and they are running a campaign that may be relevant for new users outside the EEA, particularly those interested in traditional markets. Through Bybit's TradeFi feature, users can trade gold, forex, commodities, indices, and stock CFDs within the same account. New users have 15 days after sign-up to complete structured tasks involving deposits and trade fee activity, earning trading credits based on participation. These credits function as margin for trade fee products, not as cash payouts. This campaign is best suited for traders already interested in traditional markets rather than casual users. Full details and the official partner link can be found in the description and comments. Using that link also supports the MCO project and helps us continue delivering regular, high-quality updates. Now, let's move to the lower time frames. On the smaller time frame, we're tracking the same potential 1-2 structure. But here we can clearly see the microstructure in more detail. The complexity of the pullback following the October 10th sell-off is evident. It remains a sharp and aggressive correction. That said, we are now seeing the first potentially meaningful reaction from the 78.6% Fibonacci retracement at 1.77. This reaction could be an early signal of a local reversal. Whether this develops into a simple 3-wave ABC structure or evolves into a 5-wave impulsive move will become clearer over the coming days. A confirmed 5-wave advance from this low would be the first serious indication that a broader trend shift is underway. While that alone would not confirm a breakout, it could form a larger wave one, potentially strong enough to challenge the November 24th high around 2.30. If that move is followed by a higher low, forming a clean 1-2 setup. It could become the launch point for a larger third wave rally, one capable of pushing price back into, and possibly above, the critical resistance zone. In the very short term, we are watching a micro-degree 1-2 setup. While not significant on its own, it represents the first solid reaction to Fibonacci support within this entire range. As long as price continues to hold this support zone, the structure remains constructive. A brief dip toward 1.86 or even 1.84 would not invalidate the setup and could help establish a more solid base. That's the latest update on XRP. If you found this analysis helpful, please hit the like button, leave a comment, and subscribe for more market updates.